In this video, we are going to be discussing how to begin investing in stocks. This can be really exciting because it has the potential to grow your money exponentially. Investing in stocks can also help you reach your financial goals. Whether you are a beginner or have some knowledge about investing in stocks, this video is going to give you some helpful tips. All right, how to begin investing in stocks. I'm going to break down the steps for you and I will share how I invest in stocks. The first thing we want to do is understand the basics of investing in stocks and in the stock market. We want to understand what stocks are and how they are traded. Essentially, stocks are companies that are traded on the stock market. So they are available for people to invest in them, people like us. We can buy shares of their company, a piece of the company. You definitely want to research and educate yourself about the different stocks that are out there, the different companies that you can invest in, so that you can make wise decisions with your investments. There are a lot of financial websites out there, including Yahoo Finance, and you can even just type into Google about a specific stock or about a specific company. There are also different YouTube channels. There's different bloggers and podcasts about investing in stocks. So choose one way you want to educate yourself and try not to choose so many different ways that you become really overwhelmed. And part of understanding the basics of investing in stocks is that you want to understand that the stock market is based on fear and greed. And you want to do the opposite of what the majority of people are doing. Usually when people are fearful, they are selling their investments, and you want to do the opposite. They are usually on sell so you can stock up. And then when people are greedy, they are buying a lot, but usually you want to do the opposite or even just hold your investments. But you could sell at that time and make a really good profit, or you can keep that long-term mindset like I like to do. And that way you are just focused on building your wealth and holding those investments for the long term. And I want to share, when I bought my first stock, I was trying to do a lot of research and understand the basics of investing in stocks. And I happened to find a blogger that seemed pretty well known, and he was recommending a certain stock. It was a hot stock, and I thought, okay, well, maybe I should buy it. And so I ended up purchasing it, but I really didn't know anything about the company, about the stock itself. And after I purchased it, I thought, Tiffany, what are you doing? You don't really know what you're doing. So I started doing more research and just educating myself on different companies that I could invest in, companies that I understood, that I even used. For example, one company that I invested in was Facebook. A lot of people use Facebook. I use Facebook. And at the time, it felt like a good investment for me. So I stopped just listening to different bloggers and getting hot tips on what to invest in, and started doing more research on my own. And that way I felt more comfortable with my investments, and I've been able to be very successful that way. I created my own strategy instead of relying on someone else to tell me what to invest in. And that brings us to step number 2. You want your own investment strategy. Once you have that basic understanding of how to invest in the stock market, how to invest in stocks, then determine what your own strategy is. What are your goals with investing? Do you have a longer time horizon, or do you want to make money in the short term? Are you comfortable with taking on a lot of risk, or do you need just a little bit of risk? How diversified do you want to be? Meaning, how many different types of investments do you want to have? And when you are trying to determine your risk tolerance, how risky you want to be, realize that there is a trade-off, because if you decide to be very low risk, then most likely your returns are going to be pretty low. If you're willing to have a higher risk tolerance, then you are going to get higher returns. And we don't want to be above our risk tolerance, because if we are too risky and we all of a sudden become fearful and then we sell all of our investments at a loss, then we've locked in that loss and lost out on a lot of money. Whereas if we were investing at a comfortable risk tolerance level for ourselves, we would realize even though our investments may drop, that it could just be a short-term thing and we would leave them alone and they would come back over the long term. So you want to figure out how diversified you want to be and how risky you want to be, and also what your time horizon is. Do you want to be investing for 5 years, 10 years? Do you have 30 years? Determine that time frame. And then also, do you want to be more hands-on with your investments, or do you want to be more hands-off? Do you want to automate your investing? And I was talking with someone the other day, and he has kind of a combination for his investment strategy. He wants to day trade and try to make those quick gains, and then take those gains and put it into a more long-term investment. So he has that long-term strategy, but then also the short-term strategy. For me, I like taking the more long-term investing approach. I don't like to watch the stock market every single day. And yes, I do pay attention because I do have a finance YouTube channel and I am helping people do this, but I don't want to spend all of my time day trading and looking at different stocks, looking at different investments all of the time. And I like to be semi-diversified. I have my investments in stocks. I do not have any bonds. I would rather be getting a higher return right now than trying to preserve my wealth. I have about 10 different individual stocks. I don't go over 10. If I want to invest more in individual stocks, then I just buy more shares of a stock that I already have. And then I also invest in an index fund. And if you want to know which one, I have another video about that. I will leave a link above. You can check it out later on. But I just have those 10 stocks, so it's pretty easy to keep my eye on those 10 stocks. I don't have to check the markets every single day, but I can still check it and make sure that my stocks are doing well. And then with my index fund, that is very passive. I feel like that is a great investment. It has a whole bunch of stocks inside of just one fund. So I'm still diversified inside that one fund, but I can continue to invest in that fund and not really watch the fund or the stock market because the index fund is tracking something else. So if a stock, a company goes bad that's inside of that index fund, it automatically gets taken off. For me, I don't have to worry about, oh, do I need to sell that certain investment, because the index fund is taking care of that for me. And I can also automate my investing. And if that is something you are looking to do, I have a free masterclass about investing in the stock market. I will leave a link to that below in the description. You can click on that and check out the free masterclass. So determine what your strategy is. And then step number 3 is to choose your broker. You're going to need a company to work with that can get your money invested. Of course, you will choose your own investments and set up your own investment accounts, but you will need to work with a broker in order to do that. I personally like using Vanguard. Some popular online brokers are Vanguard and Fidelity, Robinhood, Webull. There are a lot of options out there. Those are just a few. When you are choosing your broker, take into account the fees that they have, the accounts that they offer, the investment types that they offer, and make sure that you feel comfortable investing with them. I honestly have a few different brokers that I work with. Vanguard is where I have a lot of my money. They have been around for a really long time, so I feel like they are a very trustworthy company. And they also have great funds and really low fees. That's why I chose Vanguard for the majority of my money. I also have a brokerage account with Ally. I have my savings at Ally, and I find it really convenient to just instantly transfer money over if I want to immediately invest my money in the stock market. For example, when COVID hit, the stock market took a big drop and I wanted to get some of my money invested. I had some money sitting in my savings at Ally, so I was able to immediately transfer that over. And once the stock market came back up from that, I was able to make pretty good gains. I also have an account with Webull, and this is kind of just more play money. And if you are interested in setting up a free account with Webull, I will leave my referral link below, and they will give you, I think, 12 stocks right now if you sign up for an account with Webull. And of course, you do not need to work with multiple brokers. You can just start with one that you feel comfortable with, and then little by little, you can add money to that. And then depending on your needs and wants, you can set up another one later. And going along with that, step number 4 is to start small and make sure and diversify your investments. Like I said before, when I was starting out, I just bought one stock. I bought one share of one stock. I just started very small. I think it was around $40. And that kind of got my feet wet. And then I invested more and more and got more comfortable with investing. So I continued to increase my investments over time. And with the diversification, you don't want to just have all of your money sitting in one stock, in one company. That is very, very high risk. If something was to go wrong with that company and their stock fell drastically in value, you would lose a lot of money. So make sure you are diversifying. That is why it is nice to buy an index fund, because you can buy the one fund but be completely diversified because there are so many stocks inside of the one fund. And depending on your investment strategy, if it is just more for fun and to get more comfortable with investing in stocks, then you can buy a share of one company, buy another share of another one, and just kind of get your feet wet and become more comfortable. But don't put a ton of money into just one company and continue to do that over the long term. If you have already invested in stocks, comment below and tell me what your first investment was. Step number 5, we want to monitor our investments. It is important that we are keeping an eye on what we are investing in, especially if we are investing in individual stocks and individual companies. And we want to be prepared to make any changes if we need to. We do want to keep an eye on all of our investments, even if it's an index fund, but I feel like we don't need to check that as often as when we are investing in individual stocks. If you see that your stock has gone down in price, instead of just immediately freaking out and selling that investment, look at the market. Have other stocks gone down? Is there something going on in the economy that is causing the stock market to drop? Or is there something really wrong with that particular company? And if there is, then you need to decide, okay, should I sell this stock or do I think it will come back up? That's why it's important to have our investment strategy in place. Investing in stocks can be a great way to build our wealth. So hopefully these steps can help you do that. If you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And the subscribe button to subscribe to my YouTube channel and to the little bell to get notified on when I post new videos. And if you want to see even more great content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.